Hi, everyone. So that was an amazing panel. That was fantastic. It's hard to beat a declaration for a mayoral race combined with a stern warning. So I'm glad that folks are still here and focused on this, because we're going to talk about essentially the other side. So there's been a lot of conversation about how to do an ICO, a TGE, a token sale, whatever you want to call it. But we haven't talked about who's really on the other side. We've talked about the grandmas in Tallahassee, and that's a point well taken. But what's interesting about this space is it's maturing and growing so quickly as a real incredible capital market. And so when I started looking at this space, I want to say a year and a half ago, this to me looked like the emerging markets. This was a nascent space, understudied, underinvested, and it was growing so quickly. You can see the velocity of money really accelerate. And so over the last year, when we were looking at the stats last year, it was incredible. Oh, okay, we raised as a market $160 million, and the highest estimate for this year in May was still somewhere around $1 billion, and we're well past that. And so the question is, really, sure, there are a lot of small buyers in this space, but there are really meaningful, large, institutional-grade buyers, investors that are spending time and thinking constructively about the investment thesis, the models, the platforms, the protocols, and how it's going to impact our future. And so what we're going to talk about here is what are those frameworks? How are people approaching this space? What are the analytics and the tools they're employing? And where did they come from? And why now is the time to be in this space? So with me, I have three great investors, some of them of whom you probably don't know. So with us, I think, Spencer, you're probably the most prolific in terms of writing on this space. You're one of the only folks on Wall Street covering this, and you're now at Blockchain Capital, spending time investing in this space. Darsh, you come from traditional finance as well, and we're focused on kind of traditional capital markets. And Tucker's probably the most under the radar, but most prolific, very early investor in this space and has a depth of knowledge. So tell us a little bit about your backgrounds and what made the transition from traditional finance into crypto economics or this space. Darsh, do you want to start a little bit?
Sure. So I have a background as an engineer and mathematician. I used to work in U.S. intelligence before working in finance and helped build an investment platform over the last 6 years. Manages a little under $1 billion. And the transition came, caught the bug, went down the rabbit hole, and it turns out that many financial institutions were unable to hold some of these assets just from a fiduciary or platform. It's too new, and the regulations and groups don't want to risk their franchise taking bets on this type of thing. And so what brought me to focus on the space was I really wanted to do it. The partners I was working with did not want to, so I spun out and basically left that firm. They were our first investors, and our platform now is exclusively focused on digital assets.
Spencer?
Yeah, and so, sorry, I'm bumping. I expected to fight for elbow room on the plane on the way here, but I didn't realize I'd be doing it on stage as well. So I come from a traditional financial background, Wall Street, covering, doing sell-side equity research, so putting out buy and sell ratings, price targets on companies, publicly traded companies. Was covering the software and internet space, which at the time I thought was kind of the most disruptive thing on the one hand, but then on the other hand, you kind of have that crypto side thing going on that's a lot more interesting. And fortunately, was able to kind of parlay those two things together and ended up publishing Wall Street's first kind of broad industry report highlighting blockchain technology, and then was very actively covering Bitcoin before joining Blockchain Capital earlier this year.
Hey, I'm Tucker Waterman. I come from the media space based in LA. We were doing private equity, investing in intellectual property rights for about 8 years, and just stumbled upon Bitcoin in about 2013, and then jumped on the Bitcoin talk forums and immediately saw that what's happening today was going to be happening, and created a diversified portfolio through a hedge fund in altcoins, or at the time they called them shitcoins, but it worked out.
So how would you characterize your investment approach? Are you a fundamental value investor? Are you a momentum investor? Are you a growth investor? Are you a Soros disciple? How do you think about your approach?
We look at it just typically from a value investor perspective, very similar to a venture capital approach where we meet most of the teams, at least we have a number of conversations with them, build the relationship, and we buy and hold these things unless there's a reason to do otherwise, which is the benefit, obviously, of having, publicly traded tokens. If things change, you can rebalance your positions. So we typically hold them for, as long as we can.
Yeah, Blockchain Capital, we are early stage venture investors. So Blockchain Capital as a whole has been the oldest venture firm in the space, dedicated to deploying capital since 2012, 2013. We're biased towards early stage investments, but we'll generally invest across the life cycle. Being a venture fund, we are very much focused on long-term businesses and helping people build actual sustainable applications, protocols, businesses, et cetera, as opposed to kind of short-term, get in and get out over a couple-month horizon.
Our approach is opportunistic, so we have protocols, platforms, and then securities are kind of the three major buckets for us. Protocols being base blockchain, cryptocurrencies, platforms as new things come out, seeing where we think people are developing really unique ideas and platforms for innovation using blockchain technology. And then on the security side, this is kind of coming back to the Soros idea. We feel there's a wave coming in the future, and very few people are positioned to capitalize on security tokens, and so that's an area of focus for us to find real opportunity that there's lots of structural limitations for investors to get to.
So you're talking about protocols, but what are kind of the key taxonomies in your mind for this space? Protocols or platforms or distributed applications, how do you think about the space in general? How do you figure out what your buy box is among those things?
We try not too much to try and put them into buckets because we worry that it kind of blinds us to certain opportunities. And so, we try to recognize that the industry is in pretty early stages, and so we tend to be focused on things that are, important. Kind of infrastructure is definitely the theme that everybody's talking about out there. So that's, we'd certainly agree that that's a lot of what's necessary these days to enable kind of a seamless token world. So we're definitely, thinking about where the industry is, but less trying to put them in specific buckets.
Tucker?
I would agree with that. We it is so early. We typically focus on the protocol side or the things that are touching those protocols right now. It's a focus really on where the value is accruing. So you and I had the conversation, in 2014 when we looked at investing in companies, the idea was, where is the value going to go? And it seemed like it would be captured from a diversified perspective in Bitcoin. Today, you look at all these ICOs going on, and you're seeing most of the value, where is it accruing? Probably in Ether or jumping eventually back into Bitcoin. So that's typically how we're looking at this, and then trying to stay as low as we can to see what everything else is going to be built on top of.
Mm-hmm. Darsh, you and I talked about financial infrastructure as a thesis. How much of your portfolio is that, and how do you see that thesis developing?
Yeah, we've allocated about 10%, or we have funds to allocate up to about 10% to that specific thesis. The challenge for us when we look at this idea of creating taxonomies is most of the stuff that's out there is not blockchain native. Most of the stuff that's out there is trying to solve existing problems in this world using blockchain technology, which is cool. We can gain some efficiency gains, but we're not seeing, it's kind of like if somebody came to you with the idea of Uber and all of us had Nokia cell phones, and we'd be like, well, what are you even talking about, right? So that's kind of what it feels like in terms of creating these taxonomies. Is a lot of just classifying what we already know and just reclassifying it in blockchain terms. It doesn't really serve us well, or at least me. It sounds like people share that view of it doesn't serve us well to create those taxonomies yet because we just don't know what these sectors or taxonomies will look like when they're designed, exclusively for blockchain, when it's sort of massively accessible by the people.
And I think you mentioned a good point there, just that, a lot of people are focused on let's recreate the businesses that we already know, but with a blockchain backend. And to me, it feels like a lot of the opportunities out there are going to be things that are totally new and we've never seen before and just weren't possible. And it's not going to be recognizable. We can't draw a direct parallel into the non-blockchain world. It'll be new things.
So one of the themes you guys touched on is this is a fundamental venture style approach, but you also have this newfound liquidity capability, right? And what we're seeing over the last, I'd say, 2 months more and more is kind of this trend toward pre-sales and pre-sales. So coming in earlier at a discount or not, but being fairly early. And so how do you mitigate the risk when you do come in early in a pre-sale, months ahead of an offering, that that will actually find traction with a broader audience, or that token will find a market. How do you think about that risk as you do your investing?
Yeah, I mean, we're not trying to reinvent the wheel here. So we think of this as just like all of our seed stage investing that we've done before for the past few years. Try and sit down with the token projects, particularly early, hopefully, maybe 12 months before they're actually ready to do an ICO, and help make sure that we can work with the team, even if it's rough around the edges and it's just an idea. That's kind of the stage that we prefer to get involved. And then as far as, so we end up with liquidity opportunities sooner than we otherwise would in kind of traditional venture equity investing, which adds a new element of having to think about risk management. For us, again, we are long-term holders here, so we're here to hold these things for many years and hopefully watch them build and grow. But there is a risk management aspect of, if your token pops 10x or something like that, then it's probably prudent to take your cost off the table.
Tucker, how do you think about that coming in early?
I would say it's typically the same strategy you'd look at early stage startups. The one additional piece that I would say is really important is the community element. So obviously these you're building peer-to-peer open source protocols. Being able to manage and build a community, to have leadership in a way that works. We've seen this in many ways. Some with no leader, some with people who are very front and center, like a guy like Vitalik. Now we're seeing a lot of these ICOs that are more structured like your typical startups. So just understanding sort of how they're going to be building and developing that is really, really important, because that's a huge component of building these networks out.
Yeah, I think when you have an evolution of new capital markets, it starts with access. Access becomes really is sort of the original play, and the play evolves to network. As access, people find out about it, the network grows. And oftentimes people think the network is, as long as you have it, you have access, you can play. But it always evolves to a third step, which is judgment. Once this becomes sort of flat and people can start accessing all these pre-sales, judgment becomes really important. And a lot of judgment is driven by people and communities. That's where I think you can add value, you can find value, is really understanding people. And I think what Jason said was, I kind of think of it, who do you want to be long? It's not necessarily the idea. There's lots of great ideas. But who are the people that I want to be long, that I can trust that when things go wrong, they're going to be getting after it. They're going to pick up the phone and say, here's what's going wrong, here's what we're going to do. Versus the people who, when things go wrong, they say, well, that was fun, I'm glad I tried. That's sort of a different mentality that I think a lot of people have right now, because it's sort of a access and network and everybody's getting funded. But I think judgment is a really, really important component if you are getting involved very early.
Yeah, actually, I'd like to emphasize that even more. Again, it's just, people oftentimes come and ask, like, okay, what are you guys looking for in ICOs? And again, we're not reinventing the wheel here. The first thing that we're looking at is team. For a seed stage project, when you're an idea and you're trying to build it out, we really need to believe in the entrepreneur. And so, to the extent that, you're out there considering a project, just make sure that you communicate well with your investors or your partners or people that are in any way working with you. These communities tend to be relatively small, and so when we call around and ask people, and if they've had a really bad experience with an entrepreneur, they just weren't forthcoming with information, then we're going to hear that, and it might make us back away. And that doesn't mean that things always have to go well. We understand that, particularly at a seed stage, a lot of these investments are not going to work out, but it's about being very forthcoming with that information.
And I think also just looking at the economics of these things, just understanding how the token is going to actually work. Is it going to increase in value? That's why we're investing in these things. Also understanding how much these projects are going to be raising. Now that we've seen projects raise upwards of $200 million, that's not a company anymore. That's sort of what we do, which is an asset management business, which is highly intense in terms of operational. To need to do that and run a startup I don't understand how they're going to figure these things out, but they're going to have to.
So when you come in this early, you get a seat at the table in some ways, and you get to guide folks. And so an important theme that I think is emerging out of these couple of days, and Jason just hit on it again, and Brock spoke about it at the outset, is governance, right? And so legal issues notwithstanding, where do you think we're going on broader sort of token sale governance or token governance in general? And we've seen a couple of great efforts. We saw ICO governance as a platform come out, as an organization. Then we saw the Token Alliance in DC come out. Where do you think it's going, and what are you telling people in terms of governance? There's an implied covenant there, right, between the token buyers and the token sellers.
Yeah, I think that we won't see really strong governance and see these things kind of evolve until, unfortunately, we have more pain in the market. it's really hard to get investors to demand more protections and more rights and more say in the governance of a particular project when things are just going upward, which is kind of the market that we've been in over the past 6 months. But when they go downward, people definitely want those things, and they definitely get smarter about demanding them. So I think we'll see this kind of evolve in an iterative fashion over the next few years.
Yeah, I think it's just patience. It's similar strategy is just waiting, seeing what I think the smart and creative people are going to come up with those strategies earlier, knowing that it's coming because it is.
I agree.
Okay, so I'll put you on the spot a little bit. I mean, Jason brought up an important point of a great asset manager having an edge. And so we've seen lots of folks on the asset management side come into this market driven by beta for the most part. Somebody just held Bitcoin since 2013 and has done well. So what do you think your edge is when you talk to the fiduciaries that are investing in you? And how do you think about beta versus alpha in this market, and what are institutional investors essentially paying for?
I think for us, an edge is just that we've been in the market longer than most people, managing other people's money, which is very different from investing your own assets. And we've been able to, the thesis was built around the idea that diversification in the space would be a benefit. We were able to produce, returns that were greater than just holding one particular asset class. So that's the story that, has helped us. And, the past is not a predictor of the future, obviously. So we have to learn because, we're going 100 miles an hour at this bridge and it's not built yet. So we don't have a crystal ball. We're just trying to figure it out as we go.
Yeah, I think from the perspective of blockchain capital, as far as, an edge, I think that a lot of it comes from just brand and reputation, as far as making sure that you see the best deal flow. And then also, when we're talking to a lot of our LPs and institutional investors, we tell them, hey, listen, if you want to go ahead and incur the brain damage to go ahead and get smart about this stuff, then do it. But this is a space that demands specialization. And, we've already incurred that brain damage over the past 3-4 years. So, it's a little bit easier for you to just go with us. But, hey, if you want to go it alone, that's fine as well.
Yeah, I think the two things that we sort of talk about. One is the trust that's required to manage capital as a fiduciary, and I think those relationships matter. And so it's odd to be at a conference about decentralization, immutability, and trustless networks, and talk about trust being really important. But that's a huge component of working with people you trust. That's what capital allocation is all about, ultimately, especially at a seed stage or in environments like this. On the edge side, our focus is to try and stay sort of in front of the cutting edge of what's new in token offerings. Not necessarily from an ICO perspective, but specifically around security tokens. We do believe there's going to be a massive proliferation of those tokens, and few people will be positioned to really capitalize on some of those opportunities. And so for us, our edge is not, if I want early stage exposure, these are the two guys I would go to. I'm not the person who's gonna get them, frankly, because I haven't been around in other relationships. So I have to establish an edge that's different. And just like in the hedge fund world, there's 15 different ways to have an edge. And so our focus is sort of forward-looking and saying, okay, where's nobody playing? Where's a space that nobody's really captured and dominated? And how can we sort of create a moat in that space? And that's what we're focused on.
What do you think is from your perspective, a normalized return profile of this space, right? So when we in our organization talk to small investors, some of them are rational, some are not, and some folks are out there expecting 6x on the first day after the tokens start trading. But when you talk to professional investors, pension funds, what do you tell them in terms of expectations? What is a normal return profile 3, 5, 10 years out for this space, for this new asset class?
We really try to make sure that we don't overpromise here at all. I think that most of the, especially institutional investors, they get that what's going on as far as the return profile that we've seen in just the recent kind of past 6 months is really not sustainable. They don't expect those kind of returns going forward. But I think they do see this as a mega trend, a mega theme going forward. And when you're early on mega trends and mega themes, then returns are appropriately large. But what large is, I don't like to put a specific percentage or X on that.
I think for us, we also just try to be very clear that this still has so many binary components to it that, this might not make it, as far as we think it's going to, for a number of different reasons, regulatory maybe being the most pronounced, but that's also something just to be clear about for everyone.
Very similar in our conversations with LPs. We talk a lot about the idea that there's no other asset class that you own in your portfolio that you can wake up in the morning and it's just gone. and you have no recourse. So this is sort of risk of zero it's material. And it's material, even if you're right in all of your investments, you still lose all your money, right? And so the risk-reward profile you have to think about very differently than other venture investments in the portfolio. On the upside, what we tell our allocators is simply, if that's the risk on the downside, we believe that we are commensurately rewarded on the upside if we do happen to be there when it's done, and we try and do our best to make sure that happens. But putting a number on it, I think, is just outrageous. I have no idea what it's going to look like.
Just leave the brackets. Right? So we're close to out of time. I'll ask one last question, hopefully that pleases the crowd. Share one idea, something you're excited about, something you're seeing in the market, something you've invested in recently that you think really has legs, is a fundamental, organic, interesting story that's gonna, it's addressing a multi-hundred-billion-dollar market.
I'm very interested in, we invested in both of our funds into a project called Qtum, which is a competitor to Ethereum. It's based in, it's a Singapore-based project. Has a number of differences from a security perspective. The founder is also just, again, going back to how do you identify these projects early, this is a guy who can answer all the questions that you need answered. You can rip up the code and you can get in there and see that they're building something different. When you look at the amount of nodes on the network, it was kind of like looking back at something like Ethereum, where you just saw the developer community was just so massive that, while it was trading at $7, you knew that this thing was, felt like bigger than Bitcoin at that moment in time. This is one of those projects that I feel that way about.
If I discuss one on the street with people, I'm just going to tell them go for Bitcoin. Just because, a lot of times people feel like they've missed that. It's still really, really early in Bitcoin. Like 0.1% of people in the world own Bitcoin, something like that. And what happens when we go to 1%, which is not for sure, but we're certainly headed that direction. But something maybe from our portfolio that's a little bit even earlier stage than that would be 0x. So, if we think about kind of a future world of lots of tokens on lots of different applications and platforms, you need to be able to enable secure, decentralized, seamless exchange between those tokens so that people don't have to manage a portfolio of 16 different app tokens just to use their phone. So yeah, we love 0x.
You took my two good ideas. So the one I'll do is blockchain capital. Have you heard of that one? Well, actually, I do think it's interesting, and this kind of goes back to the security token idea. BCAP does publish a net asset value. And they publish it regularly, and very frequently the token trades at a discount to net asset value. So if you still use old paradigms of value investing, it's very clear that you're getting a discount. You're getting a discount not only on the existing assets of the portfolio, but on his capability to find great stuff, which I believe in personally. And so BCAP is interesting because it's another way to play the ICO world or the pre-sale world, but you get it at a discount. And so I like discounts like that, and they're much more reliable than the ones that are being pumped and dumped around. So that's my pick.
Wow, that's like a synthetic play on the space. That's fantastic. That's great. All right, I think that's all the time we have. This is incredible insight. I appreciate you guys joining us here. It's fantastic. Thank you very much.
Thanks, Dan.
Thanks, sir.